Hello everyone, welcome to Qianmo Accountants. Today we are going to talk about gold. Gold is such a special existence. In human history, since the exchange of goods happened, people have accepted all different types of items as money, like animal skins, salts, weapons, silk, shells, copper, silver, and of course, gold. Gold and silver have replaced all other what we now see as quite strange forms of money and have been used by us as money for a few thousand years, to say the least. But as the world continues to evolve, we stopped to use gold and we started to have new forms of money, the paper money, and most recently, the cryptocurrency. Back in the year of 1919, the renowned economist John Keynes famously declared that gold is a barbarous relic. With the prevalence of the modern currency issued by governments worldwide, gold seems to have receded from its historical role as the common exchange currency, just like any other items have. But unlike the rest of the items that have been completely forgotten by people, gold did not just disappear. During all this time, it seems to have just donned a veil and sneaked into the background, positioning itself as an investment option. So, how did gold perform compared to other investment options? Let's have a look at a few statistics from the year of 1975 to 2024. Gold price in 1975 was $169. In 2024, it is now $2,285, increased by 13.5 times. Dow Jones Index was 821 in the year of 1975 and 37,815 in 2024, which is 46 times increase. New York Median Property Price Index was 75 in the year of 1975 and it becomes 1,016 in 2024, so 13.5 times increase. Sydney median house price in 1976 was 36,800 Australian dollars, and it went up to $1.4 million by the end of 2023, increased by 38 times. So, looking at all the statistics, gold as an investment is okay, but it doesn't look like the best performing investment in terms of the capital increase, nor does it generate cash flows like dividends or rental income. So for the last half century, gold has typically not appeared as the major investment assets on most investment institutions' balance sheets. But regardless of how it performs as an investment, gold has never been forgotten by people or disappeared from our view. In fact, almost all central banks store a significant amount of gold regardless of its price. Isn't it strange? So, is gold just an investment item? Or is it simply an outdated form of currency? This contradiction that we observe in gold comes from the fundamental nature of gold. We may hold it for investment purpose, not a problem, but nothing can erase its inherent nature as the ultimately universally accepted currency by human beings. And it is the only naturally occurring form of currency known to humans so far. So why is that? To explore the reason behind this, let's ask this question. What's the difference between the money we are using on a daily basis and the gold? Let's say this $20 note. Why do we all accept this $20 note to exchange for food we need each day? Well, think about it. The reason we agree to use it is because we trust in the authority. We believe the authority who issues this note is not going to disappear. It is the credibility that we place on the authority behind this note that made this note worth $20. If you take this $20 to a different country, most likely people over there will not accept it because this is not their authority, right? So how about gold? What is the underlying support behind gold that makes it acceptable to almost all human beings? Well, gold is so special because the authority comes naturally with its pure existence. To understand why, let's look at why we need money. Unlike animals, we have way more higher requirements for the quality of life. But we can't participate in every single activity to fulfill all our needs. Instead, we specialize in certain areas and we make exchange. Most exchanges wouldn't make within one day, right? We usually make exchange whenever we need other stuff. So money must possess two indispensable features: the ability to store the value we have worked to create, and to serve as an accurate measure of value. It may sound like just the two small little features, but over thousands of years, only gold and silver have naturally fulfilled those requirements for money. Gold is even rarer than silver, so it has an even higher status. First, gold and silver are in quite solid forms and remains the forms for thousands of years. It's also easy to make them into all different types of sizes, which makes it easy to store and makes exchange. Secondly, what's the most crucial is that there is only a limited amount of gold and silver stored on Earth that can be mined out. Less than 0.2% of the gold is found near the Earth's crust, and the remaining 99.8% of the gold is in the Earth's core, which, as you can imagine, impossible to dig out, at least in the foreseeable future. It is also entirely impractical to synthesize gold through human efforts, because heavy elements like gold and silver were formed in the heart of the stars through the explosion of supernova. Human beings are great. We understand the formula how gold is formed, but we simply don't possess the energy of the universe. It is extremely expensive to synthesize gold on Earth, much more expensive than the value of the gold itself, so not worth it. Speaking of which, you've never heard any central banks store diamonds, right? Why? Because diamond is a form of carbon which is formed on Earth under a certain amount of high temperature and pressure. Our current technology can replicate that temperature and pressure conditions necessary for diamond formation. But we currently just lack the technology to harness the energy of the universe to create gold and silver. This natural limitation on the supply of gold and silver available on Earth, combined with the ease of storage and the ability to be shaped and sized as needed, have made them unparalleled as forms of currency for thousands of years. After the end of the World War II, it was agreed that the US dollar is pegged to the value of gold, and all other currencies in other countries in this system are pegged to the US currency. So equivalently, the value of all currencies is based on the value of gold. This was known as the Bretton Woods system. This system collapsed in the year of 1971, from which time the link between gold and the currencies issued by all the countries in the world is cut down. So what is the impact? Well, the key feature of gold and silver as innate measures and stores of value lies in the status as nearly the only stable solid forms with precisely limited supplies. Cutting the tie between the currency we use to gold and silver gives us the flexibility to make unlimited supply of currency. So we could see in the last half a century, inflation has been a constant in our daily life. Asset prices skyrocket at certain times because central banks in almost all countries issued more currency than expected. This could undermine the currency's role as a store and measure of value. So this explains why recently, after the end of the COVID-19, the gold price has been increasing rapidly and is not going down. During the COVID period, to overcome the crisis, central banks worldwide have resorted to issuing excessive currency. The market has now sensed this and is calling for a bit more discipline in currency. And gold and silver just have such an innate discipline within it. So that's all I'd like to share on my observation about gold. I am not a financial planner, so how is the gold price going to be tomorrow? I don't really know, to be honest. I don't think we would ever be going back to the days where we use actual gold in our daily life. But in the meantime, gold will not disappear or be forgotten by us. It may be an investment option, but more importantly, it also represents the ultimate discipline in currency. So, do you think gold is such a special and magical item on Earth? That's what I'd like to share on today's video. I am an accountant. I provide technical training to junior accountants to improve work performance and start a successful career in accounting firms. Accountants could be way beyond just number crunching. With our expertise, we could be one of the best business advisors to provide important perspectives to businesses. Knowing different facets about the economy and about different industries would be helpful to us. Okay, that's all for today. Hope you enjoyed this video. See you next time. Bye!